The US markets continue to push higher as the Australian market sits under the highs and congests. We go to Gary Glover from Novus Capital and ask him what he's seeing in the markets and where are the opportunities. Good morning, Gary. How are you?
Yeah, I'm good, Chris. Yeah, but kind of a tricky phase here, really. We've broken through the highs, pushed on now, looking a little extended there on a lot of the markets. There's a few sort of Fibonacci extensions that we've sort of hit in the last week here, so across some of the indices. So kind of, probably at that level where we might see some resistance here coming through. I know we've sort of got a pretty strong trend here, but have started to see a couple of distribution days sort of sneak in on some of the indices. Some of the ranges started to expand a little bit, so a bit more volatility there as well. But look, trend's still obviously strong, still pretty positive. Just normally when you get a breakout like this in the indices, you normally sort of have that rush for, 5 or 6 weeks or something there, and then expect some sort of retest there. It's just they work a little bit differently than stocks. So, so I think we're just looking pretty extended here now, so I think that, I think personally, as I take stuff off, I'd be less hesitant to be sort of putting more bets on here, actually. So I feel like it should be sort of, we've had a bit of hit, it's a pretty good move in this market here. So as we're sort of locking in some profits there, we probably don't want to be increasing our exposure, probably want to be started decreasing our exposure here. So, I'm just starting to get a few hedges in place. So, so I think it's just important to probably de-risk a little bit here after, what is a sensational run so far.
Okay, that seems like that's across all indices in the US, the S&P 500. The NASDAQ hasn't quite has the overextended that you mentioned, but the other two indices do. If you're looking at the Australian market, which we've noted for some time now,
that S&P 500 chart, Chris, that's probably the more interesting one. Is actually is that last leg up here from the October up to the high there? Yeah, so that's sort of 61.8% of the range from the low from the high to low here. So it's just a bit of a interesting sort of level there to just keep an eye on here. So so that has it's had a pretty good run. It's extended there. So oftentimes when you sort of go to a new high, I know Larry used to sort of say it normally at least move like 1/8 of the range. So if you look at that previous pullback, it usually expand at least 1/8. So I think that's around the same ballpark here as well. So so we have expanded in at least 1/8 of the range there. We've got a bit of Fibonacci there. So just got a few technical markers telling us to be cautious and careful here right now. So this is a point where you could, in the past, we could pull up here. So
So that's the S&P on the Fibonacci expansion. We'd only been so lucky with the Australian market; it hasn't had that kind of expansion.
Yeah.
You did note that we did get over those resistance levels, but we've somewhat floundered since we got there. We haven't made new highs. We haven't pushed on. Hasn't necessarily dragged down, but it seems like the bodies of these candles is much tighter. Is there anything to read into what's happening in the Aussie at the moment?
No, only that we're a bit less reliable than some of the indices. Even I sort of try to go back and see if I could find some in a historical precedent there, sort of pushing through and then kicking on and stuff there. So we don't often we're not often sort of clean here, I guess, as our interference. We've got a history of having those big panic lows. So if you look on, we've got lots of these long tails historically on our weekly charts for the All Ords and the XJO. But in terms of sort of breaking out, kicking on there, sort of got a bit of a mixed pass there. So not a great history of sort of going either one way or the other, really. So probably got a history of being quite messy involved. So so nothing really to be cleaned from that.
And no doubt we're a different market. I think earlier in the week last week you were talking about NVIDIA and how that's run harder and harder, but we don't really have that same kind of depth of tech market that's powering on in the US. We've definitely got miners and banks that you've talked about. many times before. When you look under the hood of the Aussie market that has been travelling sideways for a fair amount of time now, but choppy in a way, what are you looking for in seeing the opportunities in the individual shares?
Yeah, I mean, I think it's I guess a bit of a mixed bag here, really. I mean, you've seen like BHP and Rio, Fortescue have all started to peel back here, and while the index has actually held up. So, so BHP sort of rolled off here, quite a reasonable amount there. So I think it might have topped around just under 51. It's come back under 43.50 now. So that's done it in the face of the index holding up. So that's actually not a bad sign for the index to do that. So I just think you might sort of see some rotation there. But, I've seen really a lot of disassociation actually. So some, just look at, REA Domain. They're the sort of very similar companies, yet they're doing completely different things. Coles and Woolies and Wesfarmers, pretty similar sort of sectors. So obviously, Coles and Woolies are a little bit at heat at the moment, but Wesfarmers have gone to an all-time new high here. And Woolies has come back here. So definitely seeing stocks that normally sort of run together aren't necessarily running together at the moment. There's definitely a lot of disassociation from sort of normal correlations there. So I think, it's just sort of seeing, individual opportunities there. And that's probably the way we're going to approach the market there is maybe we give up looking at the index for a while here and just really look through our sort of sectors and our stocks as well. And even the sort of sector, oftentimes, we look at the 30-30 on the Friday sectors and try to look at what sectors are sort of popping and stuff there. But definitely seeing some disconnect from it, even from some of the sectors as well. So it's just some stocks are really doing quite well in some sectors, and others are doing pretty poorly in the same sector here. So it's definitely sort of seeing just a multitude of sort of moves there, and so I think just really got to look at individual breakup there, individual company, and just focus on that.
So a real large disparity within the segment, sectors, groups and industries on the ASX. And if we look in this week's report, you have talked about healthcare for some time. This is slightly different focus on healthcare, is more consumer products and protective. We all think about the latex type gloves that are used in healthcare. That's Ansell. You've got FB here, which we'd love to see because you're very good at picking these false breaks. What's happening here after the false break? It sort of came down, retested the lows April, sort of June, July, I should say, in 2022. Retested them, shot out, came up with not huge amounts of volume, but somewhat increased. The pullback seems to be lighter with a bit of a drop down, not a huge volume. So what's the interpretation here and what would you expect to happen from here on in?
Yeah, so I think there's a couple of positive signs. Obviously, the false break doesn't follow through and then reverse there, so we get a bit of a rally there. The volumes are, you're right, they're modest without being great there. But the pullback is probably a bit lighter again. So initially that first pullback, really light volume, so no really high selling in there. And then more of a sort of sideways little ABC sort of since then. And then got a little bit of bounce there last week here. So I think she's gone ex-dividend here this week there, but just, it's probably one of those ones to sort of keep an eye on here, because that's sort of, I think if it can consolidate here a bit longer, hold this level here in a sort of sideways manner, then we're probably looking for, maybe, a break to the, on the upper side there, but you're probably going to see a little bit more sideways orientation first. But I think if this sort of stock can hold here, we can, kind of move through there. It's had a few issues there, and so they're obviously like one of their factories was in Russia, so to sort of shut that down as well. So there's been a few disruptions for them, their business there, but the sector there, which, definitely has got some headwinds in the right direction for the next few years. I'm starting to see some of the healthcare names starting to pop up here, so definitely want to be sort of keeping an eye on here. It's also, so I've just sort of got it as a bit of a monitor here, but I think there's some good signs already, just sort of shaping up here. So just want to see it hold a bit longer here.
If we move into another part of the market, technical services group ALS, you said that they've traded in very, very tight band. Well, it seems to just, if we look over this period, so this is the weekly chart.
Yeah.
So there's a fair bit of time frame on this. seems to be congesting tighter and tighter. But then even more so, you've highlighted this kind of congestion here, which if I'm going to paraphrase you over the last couple of years, I'm going to say this is kind of impulsive on the move and corrective in the decline. Is that?
Yeah, definitely. I mean, you got, like, the last thing on the chart there is really, you've sort of gone from what the mid fours up to $14 there. It's almost a $10 impulsive rally. And then since that rally, we've just gone, gone sort of sideways here, really basically sort of, that's overlapping corrective sort of trend here. So that the whole thing really is sort of sitting up just underneath the high congestion there. So this is what we sort of, in terms of looking at those daily charts, see that sort of real strength and then struggle to go down. And then that's when you normally pop out there. So it's got the characteristics of sort of what the sort of strongest stocks look like before they do break out there. But last thing on the chart here again, it's just another little three-way pullback, and just look at the volume on that through that little pullback. It's just so light. There's not much going through there, even though it's pulled back in a three-way manner here. So just like the tightness there, the price actually tightening up. This is definitely one to sort of keep an eye on here. I think if we start to see a little bit of strength start to form here, this is one that will sort of be, oftentimes this is a set you normally sort of see before you get that, big advance there. So if you look at some of those growth stocks that have really jumped out of the range there, this is probably what it looks like. Maybe just a shorter time frame, but just do like to look at this one here longer term. Just might have a bit more work to do. But yeah, definitely, again, another one we should be watching really carefully here over the next few weeks there.
Okay, well, shifting gears and going to another part of the market, EVT. Now, this has been sort of just flicking under those highs and just slowly getting lower and lower and lower. You've got some levels sort of coming across maybe from the far left-hand side of the chart many years ago, or these horizontal lines. What's the main part of this chart that's sort of caught your attention this week?
Yeah, look, probably somewhat similar, to the last chart there. Probably just come back a little deeper there in the range there. So probably come back 61.8. So, has sort of come back under the midpoint there. But yeah, that's a long, again, it's a really long sort of corrective pattern there. What I do like is it's sort of just the last bounce in the last couple of weeks there has sort of come in at a key sort of technical level around $11 there. We had a few bounces off that region before. So yeah, just sort of people looking. I know a few people are looking at EVT there. So it's got a large, portfolio, sort of property portfolio in here. So yeah, it's definitely underpinned, with some, obviously decent sort of property portfolio. But the last update was there was a little negative in that update there. I think, EVT hold obviously some, of the event servers and stuff there, but they also hold I think it's the Alpine Resort there up at sort of Parish. That's sort of their big property there. So that the accommodation was down quite a bit last year, but as you know, the snow season was pretty horrible last year. So, so just, good reasons that obviously the price was pulled back here, but just underpinning this sort of asset there's some really good assets, potentially to be unlocked in EVT. So I know a few people are looking at this, stock at the moment here, from a valuation perspective there, but yeah, technically it looks all right here. I think if it can hold that $11 region here in the next week or two, could sort of build here, and this is sort of one that there's definitely some value to be unlocked with the company here in the years ahead there. So yeah, probably just one to keep an eye on there. Do like the fact that we've sort of got a low in place, maybe a first high low, and maybe now a second high low. So we like to sort of see that building sort of process there. So I think if it holds that $11 region here in a couple of weeks, I think this is one that definitely can build here and start to move high there. It's probably not going to be a fast move, Chris, but does look constructive to me.
Okay, well, if we return to the healthcare space, Sonic Healthcare is one we've looked at a bit before. This is a very big drop that we've just seen. Clearly, it's reporting season in Australia, February. Would I be right to say that this is related to recent reporting?
Yeah, so I think the revenue line was, I think it was sort of small. I think it was up 5.5% there. I think the revenue line there, but the profit was was off sort of slightly, sort of 6%. But healthcares have had a few, since COVID, there's still sort of a bit of a slow recovery. I think that, everyone's looking forward here, maybe the next couple of years to sort of, some more positive headwinds coming that way. So, so I think it was really only a sort of small miss here. But yeah, it definitely got dealt pretty badly. But yeah, that you can see here, that $28 level, that's been a big level for the stock in the past. It bounced off there a couple of times here now. So might have just sort of come back and made another little false break here, Chris. So I am watching that pretty closely here, just see how that absorbs that $28 level. That's a big technical zone. Definitely a sector I want to be in here. I think there's some really positive headwinds longer term here. So I do think Sonic is a quality business as well. So definitely want to be having a closer look at here. But yeah, just want to sort of make sure it holds 28 in the next sort of week or two. Oftentimes when you sort of come off like hard like this, you'll probably do a little bit of work. So we might get a couple of smaller range bars, maybe that $28, $29 vicinity. I think if the whole thing sort of tightens up in there, could be a level look at there. So you're looking at that, watching that one very closely as well here. So most of the stocks I'm looking at here are just kind of on the radar here at the moment, sort of setting up. Probably just need a bit more time to sort of prove what they're doing here. But so sometimes going to be show a little bit of patience there. Wait for the correct setup here.
Well, if we go from Sonic Healthcare, particularly the international side, but focusing on Virgin Money UK, United Kingdom, this seems to be getting tighter on the sort of the weekly, sort of congesting a little bit, and then even more of a congestion. I think you covered this a week or two ago.
Yeah.
Right, tightening up here. So what's the update on the Virgin Money UK chart?
Yeah, so the whole thing's just sort of tightening here. So we get a series of sort of high lows moving in there. Still got that sort of triangular sort of set up here in the short term. So a little bit of a kind of like an ascending triangle you might sort of say there. But I think if we sort of break out of the top side here, this is potentially could break through there. So I just had a few of these congestions in the past, and then just sort of suddenly broken out there. So do like the setup there, like the tight price action. Definitely seeing much heavier volume, Chris, on the up drives as well. So seeing some pretty good volume coming on the up drives, dries up a little bit, pull back. But yeah, just seeing some heavier volume coming on those up weeks. So I still think it looks pretty constructive there, but yeah, it's still tightening up here at this stage. So it's one to watch there. I think for me personally, I sort of just want to see it sort of break up before we jump in. I don't want to jump in too early here, just in case, So the market did a pretty good run here, could pull back. So definitely can put a few stocks under pressure there if we do ease back here. But yeah, this is sort of one that's definitely tightening up here.
Right, well, moving to the last one, completely different space, part of the market, Collins Food, clearly in the food side of things. This has pulled back as well. So had the congestion that you've highlighted here on the chart, sort of shimmied sideways, and then broke out very impulsive and rolled back over. Question mark there is, well, this decline here, that's a decent range, but how do you interpret what happened sort of in this portion of the chart?
Yeah,
Short take on that.
We saw the last pullback, basically came back, sat on top of the previous high, held there for a few weeks, and then took off, and then had a really impulsive drive here. So we've now had a bit of a sell-off here. It's interesting how that volume has actually has come in late rather than, so it didn't sort of be off the highs there. It wasn't really heavy off the highs there. It's really sort of come in as the sort of stock, as the stock's got lower, the volume's picked up here. So and the biggest volume was last week there off that low, so off that sort of key sort of support zone. So definitely saw heavy volume lines sort of coming in around that 1050 there. So that's kind of key support level there. Big volume as well coming in. So that's pretty constructive to me. So it'd be nice to see like an inside week here. So there's something like a 1050 sort of 1080 type of range here. And if it holds that level, that'll be ideal setup there. I'm not sure we're going to see that, but I think it's pretty constructive there. What's actually happening there? You got to remember, it's still pretty positive uptrend, still sitting on top of the range there. So it's not a weak trend where we're overlapping. It's a strong trend we're sitting on top of, on each sort of step there. So that's pretty positive sort of trend there. So But oftentimes when you see that construction, Chris, when you sit on top of the previous high, that's when you can go to a new high. Oftentimes, and if you see spacing there, that's what you go to a high. You can go to a new high really quickly. So I don't see anything negative here at this stage. So it looks fairly positive.
Nice. So they're the ones to be looking at as we're going through this market. We've seen the US still extend, NASDAQ come back to recent highs, the Aussie breakthrough, really push through, but hold. As you noted, some big heavyweights, the miners, falling over, but the industry is still holding up. So that implies a bit of rotation happening behind the scenes. Yeah, these are the ones that you're watching.
Yeah, there's a key one. If you can dig out the election year seasonality chart, there's one that's like 100 years old there, which sort of gives you the election year seasonal pattern. I know that sort of Larry Williams, he had an adjusted one there, which maybe just looked at the last 50 years as opposed to like the last 110 years. And it's got a slightly different, the last sort of 50 years has been quite different to the longer term chart there. But essentially, the last 50 years has set the seasonal sort of pattern for the election year is to run up into late February, fall back into late March, and then continue to climb for the rest of the year. So it actually has followed the 50-year chart quite closely. So I saw Larry Williams post it at the start of the year, and I think people are talking about it, but it's actually been bang on the money that in terms of seasonality. So it's the one that's the market's been closely aligned to since the start of the year. But it does call for a bit of a pullback here just for the next sort of month here. So, which should kind of fit in nicely for our, markets go to a new high, like the Nikkei, come back, retest the old high, and then go again. Because, the Nikkei has basically done that as well. So we saw Nikkei, I think it rallied 5 weeks, once it broke to a new high, it came back about 18 weeks. Like, it actually used up a lot more time than normal. And then it sort of came back in 3 waves, and then it built from there and went higher there. So that's the normal sort of setup for indices as well. Because indices are, you're talking about big basket of stocks. There's not like a single stock there. Once it breaks through, it can kick on. The indices, as a whole basket, whole market there. So, getting a 10 or 20% move at an index is pretty big. I mean, we've had we're over 20% move in the last 17 weeks across all the US indices. That's a pretty big move in on a quarter of the year or something. So yeah, so I don't know. It's interesting that seasonal pattern there. So just trying to be a little cautious of mind here. The election year sort of seasonal sort of chart there. It's worth having a look at the last 50 year. I think, and maybe I'll try and grab it, post it on Twitter or something, so everyone can have a look at it. But it is sort of right in the window right now, so pretty interesting.
Well, there we go. That's sort of an interesting look back in history to try help us figure out where the market's going to go from, and this has worked really well for you in the last few years. So to that point, we'll probably say thank you very much, Gary Glover from Novus Capital. And he's talked about Twitter. That will be on the left-hand side of the screen. On the right, Gary also mentioned where we look at the 30-30 list, momentum leaders and themes and sectors. There's a whole playlist, and then also some setups. Gary's talking about false breaks, springs, and 0, 1, 2, 3 patterns. There's a whole playlist to the right. Possibly check out Gary on Twitter. By the time this gets published, maybe he's found it, dug it up, and reposted it, so you can have a look there. Thank you, Gary.
Thanks, Chris.